Welcome everybody on Zoom. Welcome everybody on Facebook. And I will be doing Instagram right now. This is not another Lunch and Learn hosted by AZREIA. We do this every Wednesday at 12 p.m. Every Wednesday we bring a special guest onto the show so we can learn something new about real estate investing. This week we have Unbridled Wealth, which they'll be on here in a few minutes to introduce themselves and give us a great presentation on how to be, or what was Jason, be your own bank. Was that it?
Be your own bank, replace the bank.
Replace the bank, be your own bank.
It's a different kind of BYOB. Yeah.
Yeah. Oh, I like be your own. I like that. All right. We got to use that. So we will be talking about infinite banking. So once again, welcome. Thank you for joining us. So I will just go through a couple brief slides about AZREIA. As you can see, we have our social media on the bottom. So if you're on Twitter, Facebook, Instagram, YouTube, or just want to check out our website, please do. Our mission here at AZREIA is to support, educate, and provide networking opportunities for real estate investors throughout the state of Arizona. So we can always, we're here to support you. We want to be your best friend when it comes to real estate investing. So let's keep it rolling here. I really got to get better at this whole Zoom tabs. Let's see. All right. So AZREIA membership is fairly simple here. Here at AZREIA, there's two programs. We have our standard program, which is $100 a year. Okay. And then we have an a la carte service. So every time you go to a meeting, it'll be $5 or $10, depending on the meeting that you choose to go to. The standard program that's $100 a year is for maybe, people that are not that active. So if you plan to come to the meetings, maybe it's like 5 to 7 times a year, this would be the best program for you. Then we have our highly active membership, which is the Plus membership. And the Plus membership will be for highly active members who we plan on going to all the events and getting out there, networking, and taking advantage of everything we have to offer. That's $239 a year. And you can become a Plus member on our website at AZREIA.org. And those are our membership programs. Home Depot is a benefit, a national benefit that we offer to all our members, whether you're standard or Plus. If in this program, we're one of the only relationships that allow members to get 2% cash back on all your purchases throughout the year with AZREIA. So this way here, when you're doing your fix and flips or your turns on your rentals, you can get 20% off all your liquids. We have appliance discounts, cabinet discounts. And like I said, the 2% cash back, which you probably can't find anywhere, is something you get for being a member here at AZREIA. Our monthly meeting is coming up. Well, we do this, what we call our monthly meeting, which we have a trade show. This is Monday, August 8th. It's the second Monday of every month. It's in person at venue 8600 in Scottsdale. We do an in-depth market update and market news. We let you know everything that's going on around Arizona, Phoenix, Maricopa County. So you can definitely be educated where to take your business. We do an association update where we kind of let you know what's going on, kind of like what I'm doing right now. And then we have a trade show. And we have all our business associates. We probably have, maybe about 20, 22 business associates. They'll show up, they'll have a booth, whether it's insurance, attorney, property manager, real estate agents, whatever you need for your real estate investing business is at our trade show. It's a perfect time for you to network, meet other investors, and build your relationships and resources you need to run your business. So that will be August 8th, Monday. Then what we do is we go down to Tucson the next day, which is Tuesday, August 9th. We do this every month on the second Tuesday. Pretty much same concept. We'll do power networking, haves and wants. You get to go, everyone gets the opportunity to stand up in the room and let the group know what you have within your business and what you want for your business. This way here, you guys can connect the dots and do deals or do business there at the meeting. We do our Tucson market update. We have a special guest presenting our market update in Tucson this month, which is Bob Zachmeyer, longtime veteran AZREIA member. He did his wealth plan. He travels a lot. So when he's in town, he does come visit us out in Tucson and give us that in-depth market update that he provides that hands down is known to be the best outside of any program in Tucson. He gives you some great insight on the market. Then once again, we'll have Jack Bosch, how to build your cash flow with land. He'll be in the Phoenix on August 8th as well. I don't know if I touched that, and in Tucson, August 9th. Phoenix Real Estate Club, we do this on the 4th Tuesday of every month. So the next event coming up will be August 23rd. And when you come to the Phoenix meeting, we throw a lot of information at you. So you get a lot of, like I said, market updates. You get information from our business associates. You meet a lot of people. So, and we have like Jack Bosch will be educating on flipping land. You get all this information thrown at you. So we encourage everybody to come to the Phoenix Real Estate Club at the end of the month and discuss that. We'd like to have a deeper discussion about what you're seeing in the market as active investors. So we go around the room, everyone talks about what deals they have going on. So basically it's cool to see, some people have mobile homes, some people are flipping land, some people are multifamily, single family, different parts of the state. So it's really cool to kind of see what strategies are working and currently going on in the market at that time. We go around, do power networking. We break out in the groups of 3 or 4 for about 5 to 6 minutes. Gives a little bit more intimate opportunity for everyone to help each other out. And the goal there is what's your need for your business. So the other 2, 3, 4 people in the group are going to provide whatever they can to provide that need within your business. We do the haves and wants again at the Phoenix Real Estate Club, and Molly does Molly's marketing update as well. And we don't, like I said, it's just a brief update, but more discussion on the Phoenix market. Then we'll Saturday, August 13th, Jack will be with us for a full day. He's going to be talking about flipping land, how to do it with no money, no credit. He's going to show you how to leverage homeowners and even do seller carryback, seller financing strategy with this land. He's buying land at 5 to 20% of its value and flipping it for 40 to 60%. So it's truly a great way to do this from home. I hear a lot of push button flip deals from your pajamas, all that kind of stuff. I truly think land is the way to go when that happens on the internet, because there is no house to go see, right? Just land. You can do everything with Google Maps. So Jack's going to break that whole process down for us Saturday, August 13th. It's a full day class. So you get to meet him in Phoenix at the Phoenix or Tucson meeting on the 8th and 9th. And then he'll be inviting us to hang out with him all day on Saturday. And if you attend the Saturday class, we do a drill down, which is more intimate, where it's only a 2-hour class. This is where Jack will break down the seller financing, explain. Like I said, he's going to show you how to do it with land. You could even take that strategy for your property. So you'll be able to go to this class at no charge. If you go to the Saturday class, this class will be free. So I will see you guys the week of August 8th. Subgroup meetings. It's very important to network and build relationships. So we have veteran, seasoned real estate investors active in today's market in each one of these categories throughout real estate investing. And every month, continuously on the same day, every month, check our calendar. If any of these fit for you, you can attend what we call a subgroup. So Bob Gomez, for example, does the fix and flip group. He's a fix and flipper himself. He's a real estate agent. He's there to answer your questions and provide a networking opportunity for you to meet other fix and flippers, wholesalers, or whoever might be in the business. So go to AZREIA.org/calendar and see what subgroups fit for you. All right. AZREIA show. This comes out, it used to be bi-weekly. Now it's every week. So the AZREIA show can be found on all podcast platforms and also is on Apple, Google Play, Spotify. It's everywhere. Podcasts can be listened to. And we also do the live recorded versions on our YouTube page. So that's just at AZREIA. And our special guest today, Unbridled Wealth, we also have a podcast with them as well. So if you want to know more about them after today, definitely check out the podcast. All right, that's my gig, my spiel. So we have Unbridled Wealth here. And so just so everyone that's on Facebook or on Zoom or on Instagram, see a few people out there. This is very casual. Unbridled Wealth and talk about infinite banking. If you have a question, throw it in the comment box. Molly will get me over the question and I'll get your question answered. So feel free to chime in at any time, comment, like the post, share the post, whatever you can do to spread the word if you feel someone needs this information. So with all that being said, Unbridled Wealth, tell us about yourself.
I'll take it from here.
Take it from here. It's all yours.
Yeah, thank you so much. We really appreciate you just inviting us to be with you today. And this is fun. We enjoyed this and we really like you guys.
Awesome.
So we like getting to hang out. So yeah. I'm Olivia McGraw. All of us actually have been practitioners of infinite banking before we became brokers. We fell in love with the process, have been applying this system ourselves. We're real estate investors. And so we fully understand what you all do. And we're doing it ourselves in that process. So I'm based up in Denver. My husband and I started our first bank when we had our first baby and felt like we put on our big kid pants when we started this system. And it has massively benefited us ever since. We've used the system to buy a first car. We just closed on our first investment property this year, which feels like a really big deal. And using this system. And so, yeah, so we'll kind of dive a little bit into that, but I'll let Jack and Jason introduce themselves too.
Go for it, Jason. All right.
We'll just interrupt each other the whole time. Hey, Jason Powers here. I have this eclectic background. I started out in real estate investing back in 2008, 9, 10, got into wholesaling, fix and flips, started doing some buy and holds. I started with Unbridled Wealth several years ago, and I was already practicing what we're teaching you today and loved it so much. I got into it as a career, and I'm still doing the real estate investing. We do short-term rentals. We just purchased an RV park we're renovating. So we have a lot going on as well. And I love integrating what we're teaching you today with real estate. And so we're super stoked to be here today and teaching you guys and helping you take another step in your real estate journey.
Awesome. Yeah, my name is Jack in Tucson, Arizona. My background, I have a finance degree. I spent a little time at Morgan Stanley. And when I learned about this, took a big shift in my approach as, this personal banking system, like allows you to control your own capital. And I used it to start a first house hack, just used it to get interest in oil lease. So it's just opened so many doors, and hopefully today we'll be just give you a glimpse of like how it can not only give you an awesome financial tool, but like unlock a mindset that allows you to be the banker in all the business dealings that you do. So Olivia is going to kick us off.
Yeah, let's see here. I'm going to take over the controls and I'm going to share my screen. So here we go. All right, play from the current slide. There we go. Hopefully you all can see this. Yeah, I'm watching the Facebook feed at the same time, so I think it's catching up. We're live. All right. So we are Unbridled Wealth. Today we will be discussing some tax and legal stuff, but we are not lawyers and we're not CPAs. We know great folks for that. So this is just our mild disclaimer saying if you need specific advice, we redirect you towards those legal professionals. So let's dive in with the problem. And we wanted to kind of tailor this today. Again, it's always way more fun if you all ask questions. So please feel free to interrupt us and engage with that. So we're not just the talking heads on the screen, but just talking about like, what are we dealing with right now, which was we've changed very dramatically this year from what the situation was 6 months ago. So when you gave a presentation in Phoenix a couple months ago, interest rates are much different. The market looked much different, and we were all there on the last AZREIA meeting, and it's kind of crazy how quickly the demand for housing has shifted. So market drops. Guess what, guys? We know they're cyclical, right? Like how many times just within our adult history have we watched markets tank, and very dramatically and very unexpectedly? When 10 years ago, 5 years ago, who would have ever thought that a global pandemic would have so dramatically impacted our national economy? And we're just starting to feel the supply chain, effects of that. So with that, inflation is inevitable. And we know that inflation is going to happen, especially if you're projecting and saving up for retirement. But beyond that, hyperinflation is something that is just starting to enter our vocabulary. And we're all feeling the pain of that. So we can't expect to continue doing the same things and expect a new result. That's Mark Twain's definition of insanity. humorously, is doing the same thing over and over and expecting something different. And so what we're trying to say is that there is a way to get out. If you think of it like, the good old fashioned movie, The Matrix, that there is a way to get out of the system. And once you see how that works, there's no going back. Once you swallow that pill and go on a journey, there's no going back to believing some of the things that we've told are the only way to do stuff. So part of this feeds into, answering the question, how do we protect against those volatile markets and the rising interest rates? We're going to talk about that. And part of that has to do with opportunities that are locked in with guaranteed rates. That's critical. Number two, how do we hedge against inflation? That's a big keyword right now. How do we hedge against this? It's happening. How do I protect myself? How do I protect my assets? We have one of many solutions, but what we're proposing today is something that can fit into any of your other real estate investments. And finally, it also answers the question and the problem of the need for liquid cash and investments. So this is not like saying, an IRA or a retirement fund that's locking that money away and they're going to slap some penalties and fees on you if you want to access it early. We're saying this is a similar system to that, but the cash is liquid and it's very easy to access, which is very important if you are a real estate investor and want to be accessing that money for your own deals. So let's dive into what we're taught, some of that insanity thinking. And this is not saying that this is the only thing. This is just our approach and what we're doing. So we're taught that other people's money is what? Greater than your money, which is true. This is true. However, there is more beyond this. So what we're proposing today is that your bank is greater than other people's money, which is greater than your bank. So it's actually your bank your money that develops your bank, which can operate with the same benefits as using other people's money. And this is critical for real estate investors. What is the magic sauce or the secret key behind all of this? It's real simple. And real estate investors know this well. It's leverage. So it's leveraging your money in a system called infinite banking, the infinite banking concept, leveraging that money that gives you opportunities and access to have your money operating like other people's money, but you get the interest on it, you get the control, you have the liquidity, and there's a dozen other benefits that go alongside of it. So behind all of this, especially in modern America thinking, we're kind of taught that there are two approaches to money. What we're proposing today is that there's a third approach. The first approach is the debtor. This is very simple. You need a new car. What do? Go to the car lot, pick out what you like, go into the office, get a loan. And what is the whole name of the game? It's to pay off, chip away at that loan until you get back to what? Zero. The alternative, our favorite little buddy, Mr. Dave Ramsey, has lots of great information, but also some misinformation because he's missing some elements. Is the saver. Don't go into debt. There's good debt and bad debt. We want to acknowledge that. But the alternative is to save up. And then when you need that new car, real estate investment, whatever, you're dropping back to zero. And the important critical element within this is that going back to zero does what? You're just trying to get back to nothing. And what we're proposing is that there's another system where you don't have to give up your cash basis and your money compounds and grows literally until the day you die. And in doing that, this is a system that is utilized by the wealthiest families in America. Every Fortune 500 company, everyone in Congress, our current president, our past presidents, the wealthiest thinkers in our country are activating this system. So they're not scared when the market drops. They're not scared, and they're not scared because they have lots of money. I mean, I tend to think that those with a lot of money have a lot more to lose as well. They're not afraid because they're actually hedging against those cyclical situations and know that it's going to come up again, and they're ready to move and have a safety guard in place when that happens. So let's dive into what this is. So this is where we're going to put our thinking caps on and just hold on for a few minutes and really join us on an education journey. So traditionally, you have your little piggy bank, you save up, you're ready to go, you want to buy your first own property. So you pick out the house, you save up, and that portion of your savings goes towards your down payment on the property. We're not saying don't do this. We're saying change the direction and the flow of the money. So rather than having that 20%, 10%, whatever it is, go directly towards the down payment of your house purchase, put the money into your own banking system and then pull it back out to buy your other house. Now, once you get that house going, we're going to take the money and the rent from that house, whether it's a BRRRR method, any of that, take that money that you're getting from that house and redirect the flow, not just back to your piggy bank, but back into your bank. And in doing so, this money is going to continue to grow and compound. And we're going to go deep into how and why this works in a minute. But you keep using that same pool of money to buy your third, fourth, fifth house, whatever. And all that money goes back into your bank to repay the same loan. And that money is going to be growing and compounding for you at the same time. So this is, again, this is learning how to have $1 work in more than one place. And this is a system that many people are using. It's not just you that you're only now learning about it. A lot of folks ask us, like, why haven't I heard about this before? That's part of why we're here today, is to make this message more accessible and applicable to, especially for our favorite folks who are real estate investors. So how does that work? First of all, we help people discover where money is flowing away from them. So if you're saying like, hey, you know, I just bought my first house, I don't have a big pool of savings. What we do is actually do a deep dive into folks' finances, a lot like a financial advisor. To be clear, we're not financial advisors, but we're strategists. And so we're looking at the bigger picture of your finances and helping folks figure out where is money flowing away and being inefficient. Number two, where's your money stored? You know, is it in your mattress waiting for a rainy day? Is it stored locked away into places that are harder to access? And we kind of use this to help paint a picture and help redirect that flow and the storage of the money so that your money starts to make money for you. And again, it isn't a secret. There's legal contracts involved. It's not like, hey, you know, we're going to remove the blinders and all of a sudden you realize like somebody else has your money. No, the whole point of this is to get money back to your control and back into your system. So through this process, we help you become financially stronger, to be honest. A lot of folks, you know, it's all about that balance sheet and about getting you more of that access to your liquid cash. In that process, there is a financial education that's involved. But the hope and that the end of this journey is that you'll feel excited about your financial future and not dreading it, not dreading doing a budget, not dreading trying to figure out how in the world you're going to make a deal work out, because the numbers will speak clearly for them. So when this system is correctly applied, your money, like I said before, it makes money in more than one place at the same time. Two, what does it mean to actually be the bank? What do bankers get to direct? They get to dictate the terms of a loan. So what would it mean if you had a loan that was unstructured? What would that actually mean for you if there's a rent moratorium that comes out that says your renters no longer have to pay rent to you? Who's going to be knocking on your door to make sure that mortgage is still paid? If you're the banker, you have an unstructured loan, you have a lot more options than the person next door to you has the actual bank knocking on their door saying, hey, you know, you're still committed to a mortgage payment. Number two, there's rate options, fixed and variable. A lot of folks a year ago were saying, yeah, that's great, but money's really cheap right now. Money is no longer cheap. And so this helps address that problem. What if you knew that you would never have to pay more than 4% for your next car? You know, 4% might sound like a lot right now. It's not going to sound like that. Let's talk again in a year and see what interest rates are and find out how much that sounds. And finally, it's financial independence. It's you directing and dictating where the money goes, how and when it goes, and being able to take advantage of opportunities, which is number three. When correctly applied, you can move quickly and and grow faster. Using the system activates compounding interest. So very simply, that's your interest is earning interest for you. That's the money making money for you. It's liquid cash. So to get the loans or get the money back out, it takes 3 to 5 business days. Again, compounding interest within this, and it helps folks very simply retire early. I heard somebody recently say, don't think about retiring early, but retire often. What would it look like for you to have financial flexibility, to take breaks within your career, to be with your family, to have the life that you want to travel, to do those other fun things and not wait until you're 60 for that to happen, or 40, whatever your retirement goals end up being. All right. So Jack, do you want to do this one?
Yeah, I can take it.
All right.
Yeah, so we've used this term a couple times now, but this strategy is known as the infinite banking concept, or IBC. And what it entails is taking a properly structured dividend paying whole life insurance policy, and properly structured in the sense that there is a way to lower the cost of insurance or the death benefit and maximize the amount of your premium that you pay into it that goes to what's called the cash value, where it's accessible and can act as this banking system that you can borrow against to fund your real estate investments and major purchases. But while you're doing that, that doesn't affect the growth of what's happening in your cash value. The best analogy, honestly, is to like a HELOC. Like you're able to access the equity within your house and use it for something else, but that doesn't affect the appreciation of your home. It's going to go up or down whether you own 0 or 100% of it. So the same thing, you have basically the equity in your insurance policy is what you can access to and put to work in other investments, but that doesn't affect the way your original equity grows. So yeah, that's kind of where we'll start. So yeah, key to this is that we're working with mutual insurance companies, which means that rather than being owned by stockholders and accountable to stockholders, the companies we're using are accountable to their policyholders. So when you own a policy with one of these companies, you partake in their profits, and that goes back into your cash value to continue compounding your money within the system. These policies also last your whole life. So we'll get into this in a second, but a term policy, which we're most familiar with, lasts 10, 20, 30 years. A permanent insurance policy lasts for your whole life. So there's a death benefit that is guaranteed to be paid out, and this stays in force throughout your life. You don't have to continue applying for insurance once a term ends. And yeah, we'll touch on this as well with actual numerical example, but the largest cost is in the first year of these policies. That's when agents are paid a commission. The way we're different is that we are making the commission that we earn a fraction of what a traditional life insurance agent would make when they structure a policy for high death benefit rather than high cash value. So typically 80% of your first year premium you'll have access to right away to put to work in other investments and deals. And then, yeah, another cool function of this is that you can actually access parts of the death benefit while you're living should a critical, chronic, or terminal illness arise, which long-term care insurance is very expensive. And there's basically a rider that's just built into these permanent insurance policies that's for free. So it can take care of that for a lot of people as well. So yeah, I touched on this, but a term policy usually enforced for 10, 20, or 30 years. It's a lot cheaper because it's just purchasing death benefit, but it's also cheaper because it's an if product. And the reality and the numbers show that more than 98% of term policies never pay out a death benefit. Thankfully, because people aren't dying young or in these terms, but that means it's very profitable for life insurance carriers. So kind of on the flip side, premiums for a long time can just be lost to the carrier with no guarantee of a payout.
A lot of folks might be familiar with the phrase buy term insurance and invest the difference. And we're trying to demystify why that is. It's really catchy and easy to say, but behind that actually can cost you a lot of money in the long run. So we're saying, put your money into something where you still have access to it. Don't just pay another expense.
Yeah. It is nice to have term in place, though, if you aren't in a position to start a whole life policy, because it can lock in your younger, in theory, healthier health rating and then you can convert that term policy to a permanent policy when you have the cash flow or savings to start one. It doesn't acquire cash value. Whole life, on the other hand, it's a when product. The death benefit will pay out, but it's also an and asset. Well, so what Olivia just said, buy term, invest the difference. We're saying buy whole life and invest the cash value. Like, this isn't where you're sending your money for it to sit in as you would like a stock market account. We're funding these policies so that we get the growth, the tax advantages, the guarantees, but then can put it to work from the policy into other investments. So each premium buys a certain amount of death benefit. We're lowering the part of the premium that buys a lot of it, and paid up additions are this other aspect of the premium that are optional and primarily fund the cash value. So that's what we're making the majority of the overall premium for our clients, so that they have flexibility and it's efficient in building that cash value or pool of capital equity that they can use. And I mentioned that already.
Yeah.
Hey, Jack, I have a question.
Yeah.
So I understand this. Can you put so you could lend money. So it's a bank, you can lend money on a house. But your house or your title is not wrapped up in this policy in any way.
No, because good question. When you access a policy loan, you can tell it what bank account you want it sent to. It can go to a LLC bank account, a personal bank account, and then you're acting as the owner for whatever you're getting into. So this is separate.
No issues with title. So if there was a lien on your property,
Mm-hmm.
and someone tried to take your property of some sort, I don't know if I'm dealing with a tax lien situation. So that's why I'm thinking about this. So there still doesn't you'll have your own money lent against this house, right? Is there a lender's policy you get to protect your property and protect your money that you invest in the house if someone tries to take your house, for example?
So if I can jump in here, I think the concept here is we're setting up your own banking system. Mm-hmm. So you set up your own banking system and you become the bank, so to speak, right? Yep. So let's say that you have enough money in there where you finance the entire purchase of whatever property.
Okay.
Well, just like a bank does, if you choose to, you can create your own mortgage documents, right?
Okay.
So you become the bank. You can think of becoming your own private money lender. Right? If you're going to loan somebody else the money, you're going to leverage it. Your company's going to leverage it, not so much the policy, right?
So the property's free and clear, technically, on.
Yep.
Audit.
Yep.
Okay.
And that's why back when Olivia was talking about it, it's an unstructured loans arrangement. So you decide really the loan terms. Something comes up, right? You get hung up, delayed, whatever. You're not on the hook for a payment because you decide how long you're going to take to pay that back, because you are the bank, so to speak, at that point. But kind of without getting in the weeds too much, it basically your banking system, you control. So your real estate investment business can borrow that money and use it for whatever it needs to use it for. And then you leverage it however you need to leverage it. But the insurance carrier doesn't require leverage, because that's where the death benefit comes from. It is leveraged by the death benefit that it's going to pay out anyway. And so if you borrowed $200,000 from the policy, but your death benefit's $1 million and you were to pass away the next day, it's going to reduce $200,000 from the death benefit and pay the difference. So that's why they can loan the cash value and not be too concerned about whether or not you're going to pay it back, because one way or another, they're going to get paid back. Right.
Awesome. Thank you.
All right. So let's dive into the mechanics of how and why this works. That's, if you learn one thing today, this is a slide we want you to be able to pay attention to. Also, I just want to recognize, because a lot of folks, especially if you're young and healthy, you're like, why? Or you have no plans to have kids. You're like, why do I need to have a life insurance policy? This is simply the vehicle to allow you to have greater opportunities. We're not saying, there's a lot, dozens of places that we can place the death benefit. That's only one benefit of this. It's this system that is only available inside of a life insurance policy that we're teaching on. So first of all, let's talk about the premium. The premium itself is going to purchase what? At the end of the day, this is a life insurance product. So there will be a death benefit. And just to note too, that death benefit has to be proportionately larger than what your premiums are buying. That's what makes it insurance. Okay, number two, a portion of your premium is going to go into what we call the cash value. This is a really critical word and term. This cash value is a portion of the premium that you have available to borrow back out. And again, the words on this are very essential into how the whole system works. Loans are essential, not withdrawals, because we don't pay taxes on loans. That cash value is going to grow at a contracted rate, a minimum rate. Okay, so that's your guarantee. That's your hedge against inflation. That's your hedge against market drops, is a guaranteed contracted rate plus an annual dividend. These annual dividends are profits that come back to you, and we use that to activate compounding interest inside your policy. The dividends are also essential because these companies, it's not like, one wake-up call that I had was that since the year 2000, over 500 banks, and that number's gone up since the last time I checked, over 500 banks in themselves have gone bankrupt inside of America. All right? No insurance companies have. These insurance companies, and especially our favorite one, has been around for over not 500 years, I'm lying on that one, over 200 years. They're the ones that have survived the Civil War, 2 world wars, the Great Depression. They're not freaked out by a global pandemic or drops in the market. They're looking at the lifetime of a person, not the quick, up and down, whatever is happening today because somebody said something political or Elon Musk decided to sell Tesla, not sell Tesla, buy Twitter, not buy Twitter, whatever. So none of that's impacted by this. So let's dive into an example. Also, my caveat on this is that this is an example. We are not saying it costs $20,000 to get going. This is just a person. We decided it's a live illustration, meaning like we built out, these are real numbers. This particular person was a male in his 40s. And we decided that he was going to dedicate, again, think about the flow of the money. This isn't saying he has 20,000 in savings. This might be that he has 20,000 from somewhere else, and we're redirecting the flow into the policy. So in year one, this person has 20,000 they put into their policy, and he immediately has available $16,000 to borrow back out. Again, in this example, this person is going to let the money sit here for a while, but this money is immediately available to get back out. So for real estate investors, that's really important. That liquidity and that access is critical. We have folks who start policies and immediately borrow it back out. My husband and I had our policy for 1.5 years before we took out our first policy loan. So year two, this person puts in another $20,000. So that $4,000, by the way, is what we call the base premium. That $4,000 is the minimum to get in every year. The overfunding, the $16,000, was what immediately establishes the bank. But in year two, both the base and the overfunding amount are available to borrow back out. All right. So if we speed up this timeline, after 10 years of putting in $20,000, his payments for this particular example, he's going to drop down to paying only $4,000 a year after this. But after year 10, he's put in $200,000 into the system, but thanks to compounding interest, his policy has grown $220,000, which is really important. And at the same time, the death benefit is growing proportionately. So let's say he got sick, he can take out a loan from the death benefit at that point to help take care of a critical, chronic, or terminal illness. But for this example, yeah, go ahead. Did you have any? Oh, I thought a question came in.
Oh, you're muted, Mike.
Oh.
Thank you, Jack. Yes, question from Instagram. Clarifying that the loans can be paid back at any time during the life of the policy.
Yes. Yep.
Yeah.
Unstructured. Yep. So you're the banker. You set the terms on how much you want to pay back. And what's essential in this, though, is learning to think like a banker. And bankers know you pay back that loan with interest. And I'm going to show you why right here. Okay, this is the secret sauce. All right?
Really quick though. I have 3 different loans out for different investment type deals, and until one of them is to renovate a studio in our house that we're about to Airbnb, and I haven't paid anything on that loan, basically interest only on an annual basis, just so it doesn't compound. But there's a ton of flexibility in how you do that, and it can really be based on what are you putting that money towards. Olivia's probably going to share, if it's a car loan, then set up a monthly repayment the way you would a bank. But if it's something else that you're going to sell off in a few years, don't pay monthly interest on it. Just maintain the balance and then pay it off when you're ready. So lots of flexibility.
Yep. All right. So here's why. So for this example, this person decided at year 10 to take out a $200,000 loan at 3.5% interest. Okay. And they're going to buy, let's say 4 or 5 houses, but they're going to pay back that loan, which is amortized over 10 years. So they're going to pay back $37,000 on that $200,000 over that 10-year period. All right. But that whole $200,000 is compounding and growing as if it never left the policy. So during that period of time, your money has grown $163,000 while you were using it somewhere else. So this is where it's a both and situation. The money is growing as if it never left your policy. And that's $125,000 in growth because you used your own money inside of your own bank. And this is where it's greater than using other people's money, because you're making your money grow in more than one place. So that's just the growth inside the policy. If you took that $200,000 and bought 4 or 5 houses, that doesn't include the growth that you have in the equity of those houses. That doesn't include the rental income that you have from those other houses. This is just simply within this system, the money that you've made inside of your bank is $125,000.
Yeah. And put yourself in a banker's shoes. Are they willing to pay $37,000 of interest on the small interest rate on your deposits to make $163,000 on loans? Every day. That's the positive arbitrage world that they're living within, and it's very profitable when you're the owner of a system like this.
And if your policy is growing too, if you have up here at the contracted rate, your cash value is growing at, let's call it 4.5, and that's conservative. Or let's say 5% interest. Your policy, this money is growing at 5%. Meanwhile, you're borrowing it out at 3.5 or 4%. You're making money just because you used your money. Awesome. Did you have a question, Mike?
Oh, I'm just excited just listening. But since you said that, so everyone on Instagram, Facebook, or here on Zoom, if you guys have any questions, pop in anytime. This is Unbridled Wealth for our weekly lunch and learn. So after this presentation, feel free to reach out to Unbridled Wealth. We'll have their contact information at the end. But keep it going.
All right. So let's go on down here. So why does this system work? So you all are familiar with leverage, right? This is borrowing against your policy, not from it. So let's say you start your policy, you give Emeritus a call. Emeritus, by the way, full disclosure, they're our favorite company for 1,000 reasons. So that's the main company we're contracted with, I think 5 or 6 other companies, but they have the best products specifically for what we do, which is the infinite banking concept. So you can look them up. They've been around forever, and they're one of the best rated companies that exists. So you call up and you ask Emeritus, how much do I have inside of my policy, inside of my bank? All right. They're going to tell you what your cash value is. Again, there's a learning curve with all the vocabulary words. It's like being in the military. We have an acronym for everything. So they're going to tell you how much you have. Meanwhile, this insurance company is going to loan you their money and place. That's where the lien comes in. The collateral is you in your life. So let's say you're borrowing this money. Your money is actually growing uninterrupted inside your policy. All right. Let's say the worst happens and you're killed in a car accident while you have an outstanding loan. What happens to that loan? It's simply forgiven or reimbursed by the death benefit, which again is exponentially more than what you have out in your loan. So the loan's repaid by your death benefit and your beneficiaries receive whatever's left over. So that's super powerful. And I have some real estate investors that even recently I had to write a letter because the underwriter for another property doesn't touch your credit score, which is really important. Number two, they wanted to make sure that that loan that this person had out was unstructured. So I just write a letter to the underwriter for this guy, another real estate investor, that said like he has an unstructured loan. He's not required to pay it back. We could make it a withdrawal if we needed to. Again, there's critical language involved here. A withdrawal would mean it does interrupt the compounding on your policy. If it's a loan, it doesn't interrupt that. And so until you're ready to retire, we want those loans. We want it to be loans and we want it to be paid back until you're ready to retire. But the retirement is when you're taking loans out from your policy with no intention of paying it back. And so that's really essential as well, because, you know, it's any outstanding loan at that point, you're just pulling the money off of your policy. It's grown and compounded over your whole life. Meanwhile, your whole money, your whole retirement fund continues to grow and compound, even though you're using it to live off of. Yeah. And you don't have to pay taxes on it. That's the other critical element. So think of it as like a Roth IRA or a Roth 401k that you don't have to pay taxes on.
Yeah, as a kind of side note or add on to that, there's a quote in this documentary about our tax environment called The Power of Zero. And this guy, Ed Slott, says the single biggest benefit in the US tax code and the most unused is the income tax exemption on whole life insurance. And Olivia just described exactly how that works, but I've heard people refer to this product as the rich man's Roth, because unlike a Roth IRA that you can fund at 6,000 or 7,000 a year, like I just set up a client who's funding this at 200,000 a year, and to have money growing in here that he can use for any investment he wants at any time, and then down the road pull out tax-free, and then have a death benefit on top of that payout when he dies tax-free. Like this product predates the tax code, so there's just a ton of favorability caked into how it works. And that's why, like Olivia said, every major bank, Fortune 500 company, politicians, like there are people using this who know how to utilize it. For some reason, the financial mainstream doesn't talk about this well because it's not understood well. So that's what we're here for today, is to just shine light on something that we've learned and that we're using and think can be beneficial for the majority of people somehow in their plan.
Yeah. So they don't teach this in school?
What? Teach financial education in school? Which school?
So do you guys have like, I don't know, obviously maybe a consultation or just like an ebook or something? Or
anything? We got all that fun stuff. So first of all, we want to acknowledge you probably will remember less than 50% of what we mentioned today. I mean, that's just pure statistics with human behavior, and I get it. I heard this presentation probably, well, I don't want to tell you how many times, but I fully understood it once I became licensed, and we're trying to make the message more simple. But that means you need to follow up with us. We can't just come chase you down, but we will dedicate our time to making this system applicable for you. We want to know your situation. That's why we're not saying it's a $20,000 get-in system. We don't know you. I have a client who's putting in $300 a month, and she'll have $500,000 in retirement. She started it when she was 17, but she'll have $500,000 in cash when she's ready. So we want to see what your situation is, how we can make that applicable to you. And I'm going to pull up the chat right now and put our Calendly links here. Let's see here. Jason, I don't know if you have yours pulled up, but I
have a question here, if you don't mind, from Facebook. Can I use money from my self-directed IRA for this? Or do I roll over from an old unused 401k?
Okay.
This is sad. I literally just talked to the advanced solutions team with our insurance carrier, and a self-directed IRA cannot own a life insurance policy. something called a solo 401k can, but it can't really be used for the infinite banking concept as we're describing. So unfortunately, like funds within qualified plans, if you want to start a policy with them, you would have to like liquidate that and pay the fees and taxes on it. Fortunately, the CARES Act that waived the early withdrawal fee during COVID expired. I had a lot of people take advantage of that though. It's not something that we can recommend though, to do. That's like a decision you have to make and weigh.
But we can give you the information you need to make an educated decision on that. So again, we're not CPAs or anything, but we can help organize the information to talk about that with your CPA and to say, you know, some folks, it is worth it. If they're like, hey, I'm not making money on this year, I'll take an early withdrawal out, pay the 10% penalty on my whatever. And some folks decide to do that. But we want full disclosure of like, we're not recommending it, but we can show you what it would look like if you did. So
cool. Another question. Jack, you got that question?
Yeah, good question, Michael. You could do what you're describing. Just in that example, we waited to show a policy loan until 10 years. And part of that is because at that point, the policy is growing more efficiently. So the positive arbitrage is more powerful, meaning that the dollars in your cash value are compounding more than they are from day one. But yeah, you could take a policy loan in year one and buy a house every year for the next 10 years, and that would work just as well.
Yeah. Yep.
Awesome. Any questions out there online, Facebook, Instagram, and here in Zoom? Molly, if we can maybe put the Olivia, Jack, and Jason's information maybe in the comments of the live Facebook, so whoever's watching.
Oh yeah, that's it.
They can grab that. So yeah, even if this is a replay, you're watching this a week from now, 10 years from now, let them know AZREIA sent you.
Right. Yeah.
So they know.
We're on the AZREIA website as well.
Yeah,
so you can find us there.
Yeah.
These are our business associates. They've been with us for years. Yes, AZREIA.org. Go to our business associates tab, and all their contact information is there. And you guys usually visit us about once a year as well. So we still have to put that in the discussion as well. So hopefully, everyone that watched us could see them in person as well.
Yeah, I'll be at the Phoenix meeting in a couple of weeks as well.
Cool.
Yeah.
Well, and part of what we offer, like I said, we're kind of treasure hunters. We help organize your give you a financial overview. A lot of people pay great money to a financial planner to go do that. And that's great. You can go pay them to do that. But we'll do it for free too, because we'll just organize your information, help you look at what your budget is. What is your free cash flow? Where are your assets? Where's money hiding or being inefficient? Because that's really critical, is the inefficient money. Jason's brilliant too at setting up folks that are in pretty crazy debt. He can help you make money while you're getting out of debt. So that's a big deal if you have student loans, if you have, credit card debt, bad debt, the kind of yucky stuff that you want to get rid of. It's like, well, let's redirect that flow, still pay it off, but you'll be able to pay it off earlier, repay into your system, and then go house shopping and get your first rental deal. So
what's the time frame? Like just we consult with you, we come up with a game plan. Someone puts in 50,000, 100,000, whatever into the policy or whatever it may be. How long is it before they can access their own funds to start reworking it? Is there like a grace period?
No. Yeah. So just to speak quickly to that, like there's an underwriting process that you go through, a free med exam, so that the carrier can assess your health rating. And from that point, we can issue a policy. Usually takes 2 weeks to 4 weeks, depending on if they need to look into things more. But once a policy is issued and you drop your first premium in, whatever the cash value is, about 95 to 97% of that can immediately be loaned out via a policy loan. So you really just need to fund it and have the bank funds settle, and then it's in your policy and you can put it to work. So very little turnaround.
Love it. Awesome.
Yeah.
I think the big picture stuff is like you're starting your own I like to call it your private family banking system, right? And so you've got to capitalize it a little bit. And so even year one, like a lot of people look and go, well, I can't access 100% of it year one, but you're starting your own banking system. So even that little bit of loss of access is worth it in the long run. When you see your own numbers and you see in 5 years, in 20 years, when you're 70, how you can be utilizing this cash value over and over and over again throughout your whole life, and how it's doing a lot of different things for you as you're building that over the years, right? Maybe you start small, right? If you've saved up, a lot of people save up money and they'll kickstart their real estate investment business year one. So just like Olivia mentioned early on, you take that money, instead of going straight from bank account to start your business, change the flow. Go from bank account through the policy and then start your business with it. And then you've kickstarted your own system, and then you can utilize that, and it's growing uninterrupted year over year over year over year. So to use that 200 number, even while that 200's out, if you're using that money to make money, and let's say over the next 10 years, it grew another 300,000, that grew that 300,000, even though you had 200 of it out the whole time. So that's what we mean, growing uninterrupted, right? And there's no other system you can do that with, and then take that same system, fast forward all the way to retirement, and then you can retire off of it,
It seems like it's just like everything else in life, right? It's a long-term play, right? You're planting a seed, you're watering it. A lot of people get into real estate for the quick cash, which it can happen here and there. But this is definitely a wealth strategy. You're in for the long game. That's awesome. Denise, thanks for the information. Yes, thanks for being here. Appreciate you. Awesome. All right. Any final things? We're just about up at the top of the hour. So any last words from anybody online?
I might have one last thought to drop for people. So yeah, like I'm just thinking about that, like IRA question. Like a way I've started to think about investments is like $2 million in a 401k. Like what will that actually produce as an asset in retirement? Right now, they say the 3% rule, basically you can sustainably take out 3% per year in retirement. So a $2 million asset that you've grown over 40 years can produce $60,000 a year or $5,000 a month before taxes. Think about what a real estate deal could provide. Like I'm about to have put 30,000 into a house hack that should turn around and produce 2,000 a month through short-term rentals. And it's like the efficiency of your investments and evaluating like even where your money should be in that way. And if you have access to it, like you can discover these different real estate deals or alternative investments just because you can access your money and it isn't tied up in an asset that is more uncertain, like at the end, because we don't even know what tax rates will be in the end. So just kind of food for thought with that.
Oh man, you're just smiling, that grin from ear to ear while you're telling us. It shows us how excited you are.
Yeah.
Oh, that's awesome. Well, this is Unbridled Wealth, talking about infinite banking or how to replace the bank with whole life insurance. So I really appreciate your presentation today. If anyone has any last questions, we're going to wrap up. We're going to shut down Instagram and Facebook and Unbridled Wealth. If you could hang out for a minute on Zoom, that's great. If there's no last comments, I want to thank everyone for being at a not another lunch and learn every Wednesday of Facebook, Instagram, and Zoom. All right. Thank you, everybody.
Have a good one. Thanks.
Take care.
All right. Just end that. Cool.
Thanks, Joey.
Thank you.
Email one of us.
Thank you, guys. I already sent the email to Jack because I'm a
Awesome.
Good.
very much. Yeah.
Yep.
Great.
See you later.
Bye.
Awesome. Great.